Hi, today we're talking to David Hamilton of SunGard, and we're going to be discussing well-managed money. And so SunGard is unveiling the results of its well-managed money initiative study. So what was the impetus for this study?
Well, the impetus for the well-managed money study actually started way back in late 2008, 2009, as we began to imagine the consequences of what was then the emerging financial crisis that was sweeping the world. We sat back and began to consider what life might look like going forward as these storm clouds kind of developed and loomed overhead. And as we talked to our clients, what became very apparent was the excesses and growth of the past was now going to quickly refocus everybody, given the climate of the time, down into really weathering the storm. And through that initial study we called the Well-Managed Bank Study, we really determined that banks would, for the foreseeable future, really focus on three key assets. The first one being their customers and protecting that customer base. The second one being preserving and making sure they were allocating their capital to the right places. And the third being their staff and making sure their operational efficiencies were there and making sure they had a balanced portfolio of talent, not too much, not too little, and so on. So as we began to enter 2011 and we began to revisit our research program as we do every year, we revisited the messaging and the thinking around what we were calling at the time the well-managed bank. And as we spoke again to clients and industry commentators around the world, what we found was that there was a definite shift in the thinking and the focus of banks around the world. What we began to notice was that there was a definite shift away from the here and now, how do we weather the storm, to what does the future look like and how do we position ourselves to capitalize on the changes that will come in the future and how do we position ourselves for growth. And as we pursued that line of thinking, as we pursued those conversations with our clients, what we found out was that it was more about how do I position myself to manage both my money as a bank, the investors' money, the investors of the bank, and the money indeed the money of my customers as well. So we've refined our research program, and what we now talk to is the characteristics that define well-managed money versus the characteristics which were much more internally focused around a well-managed bank.
So this study sort of highlights 5 key challenges that are going to affect the financial services industry over the next 5 years. Can you give us sort of a highlight rundown of those?
Yeah, certainly. Well, the first challenge we think banks will need to address in terms of becoming good stewards of well-managed money is the challenge of customer empowerment. I mean, I think we would all generally agree now that never before have we seen a consumer base, a consumer market as empowered as they are today, and we think that's going to be the first challenge. The second challenge is the challenge of the popular politics and the asymmetry that we've once had in the lobby groups, now starting to become much more symmetrical. Again, I think if we look at the regulatory reform that's going on around the world, again, never before have we seen such great degrees of influence from the taxpayers and from popular politics, and indeed through a more symmetrical lobbying environment, whereas once in the past the banks have really dominated the lobbying groups. Now we're starting to see consumer advocacy groups, fair trading advocacy groups, creating a message, if you like, on the other side of the ledger. So we think that's challenge number 2. Challenge number 3, we think that there will indeed be structural changes in the financial intermediary model. The historical model that once defined what a bank did at the very core of its business model, we think will change. We believe there will be more and more non-bank financial institutions, particularly in the emerging and developing economies. We're starting to see that, as telecoms now start to enter the money transfer market, the money payments market. So we think those structural changes will begin to occur and begin to increase in terms of their adoption rates in markets around the world. And we think that'll be the third challenge. The fourth challenge we talk about is one of market tension. The historical tension that's always existed between investors, particularly equity holders and long-term debt holders, that tension won't go away, but we think it will be exacerbated, by regulators wanting to see increased levels of transparency in the market, and investors knowing that there's no return in transparency and wanting to create a much more opaque market. So that tension between opacity and transparency, we think, will drive new challenges for the industry as well. And the fifth challenge and final challenge, we believe, is more of an overarching challenge, and that is one of technology innovation and adoption rates. I think it's fair to say that both in terms of adoption rates and price points, technology is innovating at an exponential rate rather than at a linear pace, and I think that will introduce real new challenges to the banking industry around the world.
Yeah, I wanted to sort of to finish up with this in terms of innovation and adoption rates. How is that affecting stakeholder behavior?
Well, we see a number of different stakeholders, and clearly the largest stakeholder that will influence the market from a technology perspective will be the stakeholder group of the customer. And we're starting to see now how important things like social media tools are becoming in the lives of consumers. And we think the importance that social media plays in the role, in the lives of consumers will easily, expand into the financial services relationships they have as well. So once, the brand was very much in control of the financial institutions. They were the ones that placed the brand into the marketplace. They were the ones that managed the value of the brand and the perception of the brand. Now really what we're talking about is that brand perception and that brand value really being outsourced, if you like, to the consumers through things like social media. There are literally millions, if not tens or hundreds of millions of opinions and recommendations, all based on the financial services marketplace, being exchanged every day through things like Twitter and other forms of social media. And we think that will have a major impact on the way banks need to manage their customer relationships going forward.